Your credit score can affect almost every aspect of your life. It can impact your ability to get a loan, rent an apartment, and even your auto insurance rates are affected by your credit score. If you have a low credit score, it's crucial that you take the steps you need to improve it. Don't worry, I'm about to make it extremely easy for you. Hi, I'm Bruce, and I've been helping people fix their credit for over a decade, whether that's their own personal credit or others through owning their own credit repair business. I have 3 tips for you, plus an extra one that you've probably never heard before. First, you have to look at a copy of your credit report. Let's be real. When was the last time you took a peek at your credit report? I get it, it can be a bit scary, but trust me, this is a necessary step you have to take. Did you know that you're entitled to a free copy of your credit report once a year from the 3 credit bureaus, Experian, TransUnion, and Equifax? You can also get it on something like Credit Karma. But the problem with that is Credit Karma is only going to give you 2 of the 3. They only get Equifax and TransUnion. The other problem with Credit Karma is that you're not going to get complete and accurate data from them. For example, you will never find your account numbers to any of your accounts on Credit Karma, which is a problem because they're giving you incomplete data. I've included a link below of another credit report provider that you can check out if you want to get all 3 reports and scores with the full and accurate and complete data as they are reporting. Once you have a copy of your credit report, it's time to dive in and really go through it line by line by line and identify and find any errors or any inaccuracies that you might find. Things like different variations of your name or different balances on your accounts, old addresses that you're no longer associated with. All of these things matter when it comes to the accuracy of your credit report. And if you do spot any mistakes, don't panic. I've got your back. Click here for a guide to disputing any errors on your credit report. Second thing you have to do is you have to pay down your balances. Your credit score is seriously impacted by the amount of debt that you're carrying on your credit report as it relates to the total limits of your credit card accounts. Let's say you have a credit card with a limit of $1,000. To keep your scores in tip-top shape, it's recommended that you keep your balance to about 30% of your credit limit. But you know what's better than 30%? 20%. You know what's better than 20%? 10%. You know what's better than 10%? 0%. Wait, no, not 0%. 1 to 7% is actually the best utilization ratio that you can have for the best credit scores. So if you've already racked up a heavy balance on your credit card limits, your best first step is to start paying those balances down. That will instantly improve your credit score. The third thing you have to do is you have to establish a positive credit history. Positive credit are like the gas on the car. The negative items on your credit are like the brakes on a car. If you have no positive items on your credit report, you're not stepping on a gas, which means your credit scores aren't moving. If all you're doing is removing negative items from your credit report, all you're doing is taking the foot off the brake. That's not going to make your scores go up. What makes your score go up is the amount of positive credit history that you have on your credit report. And there are a few different ways that you can do that. The first and most practical way is to simply apply for your own credit accounts. Now, if you don't have established credit history yet, we recommend that you get a secured credit card to start with, and I've included a link to one below. Another option that you have is you can become an authorized user on someone else's account, like a friend or a family member. And what that does is it's actually going to copy and paste the entire account history from that account over to your credit report, making it look like it's your own. By doing these 3 things, you're setting yourself up for success. Having a good credit history means you're going to improve your quality of life. Now, here's that bonus tip I told you I'd give you, and it has to do with when you pay your credit cards. Most people pay their credit card balances by their due date, which is great, and you should do that. However, if you want a secret hack to instantly improve your credit score, simply change the when you're paying that. If you pay your credit card balance before your statement closing date instead of on your due date, that little change alone will instantly improve your credit score. And here's why. The balance that gets reported on your credit report is the balance that is on your account when your statement closes. So if your statement closes today and your due date isn't for another 2 weeks and you pay off your credit card in full in 2 weeks, well, that's great, but the balance already got reported without you making that payment. If you make your payment before the statement closes, then the balance that's going to get reported is a balance that already reflects that payment on the account. By the way, I give tips out like this all the time in my newsletter. I'll post a link of it below. These 3 things will start your journey to improving your credit score. I'll show you how to get one of the most common mistakes off of your credit report in my next video. Follow me here so you don't miss it, and I'll see you then.